Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking crude oil futures. Crude oil futures popped again today, up a little over 1%, breaking above 46.25 on the high side of things. And a lot of it had to do with more belief that the demand side of things was going to improve. And the EIA figures that we got yesterday confirmed the bullish figures that we got out of the API data. Now, API had two large draws. We don't need to go into the numbers because it's day-old data already, and I'm sure you've heard it, but the API had two multi-million barrel draws on both crude oil and gasoline. EIA confirmed that with the same level of figures, same level of draws, multi-million barrel draws in crude oil and gasoline. But there were some other concerning things in the data, like an increase in in supply from U.S. producers. U.S. producers jumped up to a record high, so it was a mixed bag. And yesterday's rally petered off, but then ended up slightly up on the day. Now, what we got today was a 1% rally, and a lot of it came off of the IEA report. So the EIA is the U.S. Energy Information Administration. The IEA is the International Energy Administration based in Paris, France. And their monthly report had horrible OPEC figures built into them for oil bulls. One of those was the 14 members of OPEC actually increased production by 340,000 barrels from the last report that the IEA did. This is the group that's supposed to be cutting production to try and rally prices. Also, the compliance to the production cut by those OPEC members dropped from 95% compliance to 78% compliance. That is a huge drop. A lot of that coming from Libya and Nigeria, but Saudi Arabia as well got above 10 million barrels a day for the first time in a while. They consider that to be more of a structural problem than deliberate, but you never really know with OPEC. The non-OPEC producers on the bright side for the bulls bumped their compliance up to 82%, so that's a little bit better in terms of the cuts. We also got a demand increase estimate from the IEA, so that's a little bit better for the bulls, and hence the 1% rally that we saw today. The IEA raised its demand estimates for 2017 by 100,000 barrels, up to 98 million barrels a day for the fiscal year 2017. And that's pretty much in line with where production is. Production is a little bit higher than that, and you combine stockpiles into there. And right now, it doesn't look like there's enough demand to draw those stockpiles down to get oil prices markedly higher. But Goldman Sachs is still looking for shock and awe from OPEC in their next meeting. They've called for this meeting. There's no date on it as of yet. Crude oil up about 1% today. This is Bob Iaccino talking crude oil futures from the CME Group trading floor in Chicago.